Yo, welcome. This is Keith, and this is Crypto Bullseye. And today, the $100,000 challenge is back at the request of you guys, the community. So we talked about Cardano previously. Why is this one going to be different? We're going to be talking about Algorand in this video, and the risk to reward potential is even greater than Cardano. So that's why I'm showing you this token. We're going to go through how many Algorand you're going to need to make $100,000 in the next run. And we're going to go through that step by step. And it's different because we're not looking for extensions. We're looking for previous highs. It's more conservative. It's more watered down than the previous video. So let's go through step by step and analyze Algorand. Right, here we go. This is the Algorand chart. This is what you're here for. Get your trading view chart or whatever platform that you use up, and we go through this step by step together. If any of you guys are beginners, I've got a little trick, a little tip for you towards the end of this video. I'm going to show you how to swim with the whales, show you how the whales apply their support and resistance on the higher time frames, how you can replicate that, and by distributing percentages of certain allocations and then accumulating at other areas of support, then you can become a whale yourself, or in fact, you can learn how to swim with the whale. So stay tuned right to the end for that little tip. And what I'm looking for here, guys, and I said it's more conservative, it's more watered down, is this $2.38 level. And the reason why I'm looking for this $2.38 level is because of this here. Because of this candle wick, which showed me huge rejection in November 2021 and then sent the market flying to the downside. It wasn't just Algorand, it was the rest of them. But what we're looking for in this channel is what's got the best potential upside in comparison. So it's all well and good looking at XRP now. It's all well and good looking at Bitcoin. But Bitcoin and XRP have made their new previous higher lows. So they're making higher lows and they're up sitting at these levels here, Bitcoin and XRP. Whereas Algorand is something that has just completely bled. And that's why we looked at Cardano as well. Cardano put in a new bear market low recently. So the upside for Cardano is a lot greater than what other things like XRP, Bitcoin, and other altcoins that have managed to rally is concerned. So these are the levels that we're looking at, and this is why it's important. And the $2.38, the conservative close, if we divide $2.38 by current price action, which is 11 cents, then you get 20.57. So what does that mean? It's a 20.57x. So how much do you need to make $100,000? If you put in $4,861 at this level now, and then price action went back to the $2.38, our conservative close, then that would gain $100,000 in the next run. So that's the first thing, you guys that just want to buy. Remember, risk management's the key. If you've got 100,000, if you've got 5,000, if you've got $10, put all your eggs in one basket. It's a recipe for disaster. So educate the appropriate risk management, diversify your portfolio. And on that note, guys, how to swim with the whales. I'm going to show you this little trick now. Okay, we're left with the dieharders, the people that want to learn how to trade, the people that want to apply the appropriate risk management, and the people that don't want to put all their eggs in one basket. This powerful trick to help you swim like a whale is going to revolutionize the way that you trade, guys. If you're new to crypto and you are new to charting, firstly, get your trading view chart up, get on the weekly time frame. It's the weekly time frame. Each one of these candles represents 1 week of price action. What we're going to do is go onto the bar chart here, and we're going to click line. So bar style and line. The reason why we're going to do this, and I'm going to simplify it as much as possible, is we're going to look at how many times price action has had a reaction at certain levels. And what we're going to do is we're going to apply our support and resistance lines in on the back of that. So easy, easy, easy. What we're doing is we're just counting how many touches has certain areas had. You can see this has had 1, 2, 3, 4, 5, 6 before it come down, fell through, and is that going to act as resistance? There's one level that we're going to put in. The next level we're going to put in the bottom. Got the bottom here. Nearly touched once, twice, 3 times. That's an important level. Bottoms and tops are always important levels. So while we're talking about that, let's stick the top in there. And then let's add our additional support and resistance lines. You can see here, 1, 2, 3, 4, 5 times. So that's one area. We just carry on doing this, and then I'll show you the next part of the trick. I want you to replicate this yourselves, because this is how you'll learn. These areas here, strong areas of support and resistance. What these are going to be is these are going to be our accumulation and distribution levels. So what you need to do is you need to work out in your head what level you're going to be distributing and what level you're going to be accumulating. And the reason why I say this is because if you keep accumulating at these levels here, at these support levels, before price actions hit them, then there's a lot more downside. So one rule that you can do is add in a 50% rule. And you can do this by simply getting your Fibonacci top to the bottom and then build in your 50% area. So you build in your 50% area. This is this area here. And what we'll do is we'll mark that in a different color. Mark that in yellow. So 50% areas in yellow. Get rid of the Fibonacci. Then if 50% is your rule, what you're doing is you're not accumulating above the 50% level and you're not distributing below the 50% level. You can use it as 40%. It's even more conservative. But just for this example, we're going to use 50%. So what you're looking at doing here is you're looking at accumulating at these strong levels here. So not all your eggs in one basket. If you had $1,000, put in 50 here, 50 here, 50 here. And what that does is it brings your average down of accumulation. What you're planning on doing is riding it up and accumulating like the whales do until we get to this 50% level, in which case we can start distributing. So you can start distributing at these levels of resistance. You can start distributing here, 10%, 20%, whatever your levels are, build them in. And that's how you can get an edge in the market. And that's how you can swim like the whales, guys. If you want more examples of this, if you want more price action, if you want charting analysis, charting tutorials, let me know in the comments below and I'll be happy to go over them step by step with you. So take care from me. Enjoy the rest of your day and goodbye.